Good morning. I'm Andy Myers at Weiss Research, and this is your morning market alert for Monday, August 22nd. Stocks on Wall Street may follow the European markets higher today, rebounding from last week's steep sell-off. The Dow Industrials fell 4% last week, and they're down 11% so far this month. The catalyst for the sell-off was Standard & Poor's downgrade of U.S. government debt, following a deal to raise the debt ceiling. But the negative market sentiment has been exacerbated in the past couple weeks by disappointing economic data and renewed concerns about the European sovereign debt crisis. Many investors are looking for the markets to stabilize this week as they await the gathering of international central bankers in Jackson Hole, Wyoming. And the highlight of the event will be Fed Chairman Ben Bernanke's speech on Friday. Last year at Jackson Hole, he signaled plans for a second round of quantitative easing, or QE2, triggering a rally in stocks. Most analysts don't think he'll go that far this year, but they are looking for some soothing words to calm the markets. Traders do seem to be showing some increased appetite for risk this morning, as stocks and commodity prices rise. Right now, crude oil is gaining more than $1 to nearly $84 a barrel. But that market is likely to be extremely volatile as traders keep a close eye on the situation in Libya. Rebels swept into the capital city of Tripoli over the weekend, and Colonel Muammar Gaddafi's regime appears close to collapse. If the months-long conflict there comes to an end, it could signal a resumption of oil exports, which would likely drive down prices. However, even as investors creep back into risk assets, they're still favoring the ultimate safe haven investment, gold. It's rising to another record this morning, around $1,870 an ounce. But another asset still viewed as relatively safe, U.S. Treasuries, are dropping in price. And the yield on the benchmark 10-year note is rising above 2.1%. On the corporate front, we continue to watch shares of Hewlett-Packard. They're set for a 2% bounce at the open, following a plunge of 20% on Friday. HP cut its sales outlook, said it may spin off its personal computer business, and announced it would get rid of its web OS operations, including the disappointing Playbook tablet computer. Financial stocks may also be among the biggest winners today after taking a beating last week. And analyst actions are moving a couple other stocks. Aluminum giant Alcoa is jumping more than 4% after Davenport & Company upgraded it to buy. The analysts base the call on the potential upside in aluminum prices and strength in Alcoa's downstream segments. Meanwhile, JP Morgan said shares of FedEx look cheap. The stock has plunged more than 24% in the past 6 weeks on concerns about the overall economy and FedEx's profit outlook. JP Morgan did lower its earnings forecast and stock price target for the company, but said the market is already pricing in weaker quarterly results. Right now, shares of FedEx are dropping nearly 2%. That's the latest from Weiss Research. I'll be back after the opening bell, along with Jen Amos, to bring you all the market reaction.